Good morning, everybody. It's Monday, July 15th, 5:26 a.m. Central Time. Grain markets are lower this morning. December corn futures down 5.25 at 409.5. November soybeans down 16.5 at 1048.75. Ugly trade there. The wheat market is lower across the board by double digits, with the exception of the spring wheat contract down only 6 cents. Start off with this. Former and perhaps future president of the United States, Donald Trump, survived an assassination attempt on Saturday. We did not write any copy for this. I don't think there's really anything we can say that hasn't been said. This was a tragedy. The president thankfully survived, although an innocent man was killed. This was a tragic sequence of events. I felt the need to address this because, first off, how could we not? And secondly, I did have a series of questions come in via text and email yesterday about the impact on the markets. And this is a market show. Personally, my personal thought is I don't think this is a market moving event. It's a tragedy. Is it a market moving event? No, I don't think so. The argument that I saw and that I heard was that, Joe, this increases Trump's odds of being elected. And I agree with that. And therefore, it's bearish soybeans because of trade war implications, maybe friendly to stock market because of tax cuts and business friendly type stuff. Maybe that's true. I don't know. I feel like we're trading more supply and demand and trend this morning. God bless President Trump. God bless the United States. Let's get into the grain markets.
Friday's USDA report included some friendly surprises for the corn market. Unexpectedly, USDA increased its old crop U.S. demand projections by a total of 150 million bushels. The increase is contrary to what was indicated in the June 28th stocks report with regard to old crop supply and demand. In any case, the old crop U.S. carryout projection of 1.9 billion bushels was much lighter than pre-report estimates. The new crop U.S. corn carryout number was pegged at 2.1 billion, also lighter than expected. USDA added 100 million bushels of new crop demand via exports and feed.
I know everybody's question is about the production numbers, and USDA left the yield numbers for corn and soybeans unchanged. They increased the acreage number for corn. We knew that was coming because of what was printed on June 28th. They decreased the number for soybeans, the production number, again, because of the acreage number. To go back to those demand numbers, so USDA added in total to the corn balance sheet between old crop and new crop 250 million bushels worth of demand. They added 150 million worth of old crop demand via feed and exports and 100 million to new crop demand. This was a friendly report. On a day like Friday, we knew that yield number was probably going to be unchanged. This was about the most friendly report you were going to get on a day like Friday. The action in the marketplace was extremely disappointing to me. You look at these estimates, and we were 150 million bushels or more below the average trade guess for old crop carryout. Same thing with new crop. The market bounced off the lows in corn, but finished the day like unchanged, and now we're lower this morning. It's incredibly disappointing to me. When you look at the corn situation, ending stocks to use ratio, premium subs, you guys have this chart in your email this morning for all three crops, corn, soybeans, and wheat. It's still projected to be bearish. The new crop projection, stocks to use 14.1%, is very similar. It's in line with what we saw in 2016, 2017, 2018, 2019. Those were not good times in terms of price action, and these are not good times now. And this stocks to use ratio statistic is about the best statistic out there in terms of trying to figure out the supply and demand situation. Is it loose? Is it tight? What should we be doing in terms of price? I don't have much to say about the soybean and wheat numbers. Nothing exciting there, but the corn numbers were friendly and the market couldn't rally, which is very disappointing to me.
Fund traders are holding a record net short position in the corn market. CFTC released weekly commitment of traders data on Friday. During the week ending July 9th, the funds were net sellers of 10,000 contracts of corn. The net short of 356,000 contracts of corn is the largest on record. Funds were net sellers of 29,000 contracts of soybeans. The net short of 163,000 contracts of soybeans is the largest since May 2019. And finally, the funds were net buyers of 5,000 contracts of SRW wheat on the week.
Across the corn, soybean, and SRW wheat contracts, the funds are net short 588,000, which is a record as of July 9th. Premium subs, you guys have the detailed fund tracker charts for all three crops in the email this morning. So I don't know. They just keep leaning on this thing, and they haven't seen a reason to cover their shorts. They've been making money in these positions clearly, with soybeans posting fresh lows overnight. 2 out of the 3 contracts of wheat posting fresh lows. Corn is very close to fresh lows. So what's it going to take to scare them out of these positions? I don't know. I mean, U.S. weather market season is kind of behind us to a significant degree. It's not to say things couldn't change, but this is just indicative of a bear market and a loose supply and demand situation.
If you guys have not checked out our premium content, you sure need to do so. Joe, can you tell me about some of our premium videos from last week?
Report day is always a good day to be a subscriber. I have a USDA snapshot video blasted out within, I think we were out within 12 minutes of the release on Friday. Just ran through the high level items. Friday's report was kind of surprising to me, and I kind of did a review in real time. On Thursday, we did social media circus. We usually do it on Friday. One of the topics we suggested we covered was the idea that farmers should just plant less corn so that the prices go up, and the implications behind that. If you guys want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel it anytime. There's no other fee, no other obligation. Nobody will try to sell you anything else. You'll get our morning email every single business day at 5 a.m. Central Time. New premium video every single business day. You can jump on our text message service. This includes all of my cash grain marketing recommendations, a lot of actionable stuff, everything from crop insurance to policy to production cost, that sort of stuff. Give that deal a shot this morning, guys. Sign up. I'll forward you a copy of this morning's email.
Heavy weekend rains fell across portions of northern Illinois and southern Wisconsin. One pocket of north central Illinois saw more than 6 inches of rainfall over the last 72 hours. Some pockets of southern Wisconsin saw more than 3 inches. Indiana and Ohio saw lesser amounts. The forecast offers only scattered rainfall for most of the Corn Belt during the next 10 days. Heavier amounts will be confined to the south and southeastern U.S. Temperatures are slated to trend below normal for at least another 10 days and perhaps through the end of the month.
Those pockets that caught the real heavy stuff, it wasn't real big. It was what, 2 or 3 counties in Illinois, maybe. Those are big time yielding counties, though. I haven't heard reports. If you guys are in those areas, drop me a note. Let me know what you think. I know there's some severe weather warnings, perhaps again for today. The forecast is like mostly dry. I guess the trade seems to be of the opinion that soil moisture in the west has been adequate to too much, if anything, and following those hurricane related rains in the east, they're in good shape. So even though the forecast is a little dry, there's no threat here. The forecast is cool. You're talking below normal temperatures. Really looks almost through the end of the month now. So the way the market reads this, there just is not a weather threat.
The Brazilian soybean crop is slated to expand at its slowest rate in almost 2 decades. According to Safras and Mercado, Brazilian farmers will plant 117 million acres of soybeans this year, up 1.9% from 2023. The percentage growth hasn't been this low since 2006 when the crop area actually declined. The slow growth is attributed to ample global supplies that are weighing on prices and eroding profit margins. The Brazilian soybean crop is still anticipated to reach a record 171.5 million metric tons, thanks to an expected 11% increase in crop yields.
I think that's the estimate from this group. USDA's got the number at 169, but you're splitting hairs there. So they're still going to expand. It's just at a lesser rate. When it comes to soybean production, Brazil is expanding rapidly while the United States has basically flatlined. We haven't gone anywhere in years because we don't have any more acres. We're losing acres, if anything, where Brazil continues to expand. This speaks to our demand problem. So you look at U.S. soybean exports, which is the green bar, if you guys are watching here, we're declining. And that estimate for new crop, the last one on the far right, that green bar, a lot of people, myself included, would argue that that's too high given what we know today. We've got like a non-existent book of new crop soybean export sales, yet USDA is calling for this big increase. The crush number is probably real, and we're expanding crush. There's new plants coming online before the end of the year. So that's real, I think. But the expansion in Brazilian production speaks to the U.S. export problem, and the increase in domestic processing has not been enough to offset big crops and that sort of thing. It's just not a good deal.
President Joe Biden has failed to deliver on his biofuel policy. Biden's climate bill is incentivizing the import of foreign raw materials for biofuel production. These imports have a lower carbon score compared to U.S. soybeans and corn, making them more valuable when it comes to climate policy. Because of this, imports of used cooking oil from China and waste beef fat from Brazil have risen to record levels, while demand for U.S. crops has eroded. This situation comes at a time when U.S. farmers are projected to see the largest decline in farm incomes since 2006.
We need some help here desperately from the government, and it looks like the administration is going to kick the can down the road until after the elections. That's the way that it looks. This is a quote from Gordon Denny. He was actually did a premium video with us a few months ago. He's an ag consultant and former procurement director at Bunge. He said the U.S. is designing rules to help our competitors and our competing countries' farmers, and I can't help but agree with that. I mean, this stuff with the used cooking oil coming into the United States, we're using that instead of instead of soybean oil. 45Z guidance is nowhere to be found, and we desperately need it. We desperately need SAF, and the groundwork is there, but we need specifics, and we're not going to get them, I don't think, for a while. I know they've got this comment period going on right now with regard to, I believe, 45Z, and we hope that maybe we see something soon, but I don't know if I'd bet on it. What did cattle do last week?
They were down for the week. Feeders were down an average of 466 last week. Live cattle lost an average of 263 last week. Cash cattle trade was steady to lower last week. In the Southern Plains, cattle sold at 188, $2 lower compared to the prior week. Up here in Nebraska, cattle sold at 198, which was steady with the previous week. And over in the Western Corn Belt, cattle were steady to $3 lower at 197 to 198.50. Box beef was lower on the week. Choice closed Friday at 322.06. That was down 8.37 for the week. And select closed Friday at 302.31. That was down to 275.
U.S. dollars flat this morning. Stocks are up. The S&P's up 23. The Dow Jones is up 200. The futures at least are over 40,000 in the Dow. Bonds are off. Gold's down $3. Crude oil is about flat, 82.17 in the August WTI. Have a great day, guys. We'll talk to you on Tuesday.